Hello traders, Gary Wagner here, just about 12:15 in Honolulu, 5:15 in New York. It is Wednesday, 10th day of January 2018, and this is the Daily Report for gold and silver. Mixed bag in the precious metals, with gold trading higher and silver trading fractionally lower on the day. Gold closed up about $3.70 to close at $1317.40. Noteworthy was an intraday high above last Thursday's high. Of course, we'll discuss that in detail as we pull up technical studies. Silver breaking back below $17, $16.99, a net change of about 2 cents, negative 2 cents on the day. And that is all in light of a weaker U.S. dollar, down 16 points at 92.10. Now, the equities markets as a whole over the last couple of days has been softening, but modestly today, down 16 points in the Dow, 25,369, NASDAQ down 10, and the S&P also down, but down ever so slightly. Finally, Bitcoin futures, they are trading in a more compressed and consolidated range than we have seen over the last couple of weeks as they began to trade in the futures market, with the CBOE Bitcoin trading at 14,540 and 14,385 for the futures contract over at the CME. Traders, interesting action in gold trading today as we see gold prices up about $4.60, currently fixed at $1318.30. But what is most interesting or impressive about today's action is the intraday high that came in well above any of the most recent highs, trading at $1328.60, which is actually above the intraday high achieved on Thursday. This is Thursday's candle here, when gold traded to the highest high and the highest close since this rally began back in mid-December. We have seen this market rise roughly $90 per ounce before consolidating, selling off for the last few days. So today's green candle is in fact the first time in the last 4 trading days where gold has closed higher, not only on the day, green candle, but when compared to the previous day's close, which is approximately where the market opened at. And the fact of the matter is, with this high that is above the high on Thursday, it gives us a sense that what we are witnessing is some sort of a base forming around 1305, call it 1300 to round it off, in which we could actually see this market find some support. And traders, as you recall, over the last couple of days, I have added a much tighter fib retracement, which simply accounts for the entire range of this rally from 1327 on the top to 1237 on the bottom. We can certainly see these lines here, with this being the bottom and this being the top, our baseline, so to speak, of this particular retracement, and the fact that we were looking at some potential support at about 1306, and that is a 23% retracement. But another thing that I found quite fascinating is when we compared this fib retracement, the shorter one, to the one that we had existing, which incorporates the largest rally of last year. In other words, when the market went from 1200 to 1362, 1363. And here's what I find interesting. It is the harmonics that come into the market. And these are the harmonics we're looking at. From this large rally here, if we look at the 78% retracement, that comes in at 1327. And lo and behold, that is the baseline bottom or beginning of this particular rally. Then when we look at the top, our baseline here is at 1361. If we move down to the 23% retracement, that comes in rather close to the baseline that we begin at 1327. So we have the entire range, trading range of this most recent rally, which can be seen as a 78% retracement of the big rally and a 23% retracement in terms of the range itself. I'm not sure what to make of this observation, but to me it is quite interesting. As far as our current trade goes, my recommendation is to maintain your current long position, and we moved our stop yesterday to just below 1305. Maintain your current stop level. And traders, as far as silver goes, we have seen silver trade in a pretty wide range today. When we look at today's daily candle, that is this candle right here, it is currently maybe a tick above where it opened at, but it is currently trading off by about 1 cent, trading exactly at $17 per ounce. We did pull profits for all of our subscribers that were long silver. And my sense is that we want to see if there's any more downside that's going to come into the market, or if in fact we see prices hold this long-standing 200-day moving average. If it can find support and find some sort of base here, you might want to consider moving back into the long side of the market. But as for right now, my recommendation is to maintain a neutral stance with no active trades in silver. And traders, as we spoke about in our opening letter, one of the key factors that was supportive of gold today was in fact a weaker US dollar. We can see that expressed on this daily candlestick. The dollar itself lost about 0.2%, currently trading at 92.07. We can see that for the better part of December, the dollar was under extreme pressure, trading from about 94 until it found tentative support at around 91.50. The last 3 days have been days in which the dollar has been rising and thereby creating some downside pressure that we saw in gold, but it seems as though at least for the day that has reversed. Whether or not this trend continues, of course, is going to be a primary factor influencing the future price of gold. And traders, lastly, I do want to take a look at Bitcoin futures. Bitcoin futures still trading below 15,000, but finding some support at around 13,000. The most notable characteristic in terms of recent activity has been a compression of range. As you recall, futures started trading with these wild gyrations, opening at 15,000 per Bitcoin, trading to 20,000 plus, and then dropping precipitously down to these lows here at about 11,000, 11,265, before trading in a much more narrow range, defined at the top just below 17,000 in the bottom, support level at about 13,000. We absolutely, on a technical basis, are starting to get a large enough data set to be able to analyze this with some credibility. And what it is showing us is a couple of things. One, we have extreme support, at least tentatively, at around 13,000 for Bitcoin. We also currently have some real resistance at about 14,018 to about 15,000 per Bitcoin as exhibited in these areas of congestion up here. What we want to do is see how volume develops in this contract before actually putting our first trade on, but we are developing a pattern, and a pattern is something that we can work with in the future to capitalize and profit from. Traders, the topic of today's opening letter was whether or not gold is actually forming a base just above $13. While it is much too early to tell in any sort of definitive manner, the fact of the matter is we had a low today that equaled the low of yesterday and a higher high than we've had not only for Tuesday, Monday, and Friday, but a higher high than Thursday. And that tells me that there is some bullish potential in this market, which means that rather than experiencing any kind of weak or strong correction, we simply might be looking at a period in which gold is consolidating. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review.